Good afternoon, everyone, and welcome to this Nadex webinar, The Basics of Binary Options. My name is Todd Rich. I am with Nadex. I'm actually the head of education, and I'm going to be taking you through the session today. So thank you for joining us. I know we kind of tossed this on the calendar early this week, but we've had so many new customers in our markets this week that we felt it was good to keep offering up opportunities to welcome you all to Nadex. So with that, I want to welcome you all to Nadex. Love having you in our markets. And let's see if we can explain and go through the basics of binary options and set you up to, for your greatest opportunity for success. I mean, we're here to help you. We want you to be successful. If you're successful, we can be successful. So with that, let's go ahead and jump into the basics of binary options. Now, before I start, all of our webinars are sponsored by our compliance department. So I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, and that any trading decisions you make are solely your responsibility and at your own risk. And the other thing I'd like to point out is that this is an educational session. So this is definitely education. I don't want you to construe anything I say today as a buy or sell recommendation. And we will be doing a very practical demonstration after we go through a slide deck. I want to explain to you how binary options work to give you a better feeling and an understanding of what they are and how you can trade them. But when we do that practical demonstration, I don't want you to take anything I say or show you as a buy or sell recommendation. Okay, enough with that. Now I am going to put up some housekeeping items for, I'll do this now and then I'll do it at the end of the session as well. One, as I mentioned up front, we're here to help you. If you've got questions about our products, about our markets, about your Nadex account, please email us, customerservice@nadex.com. We are here to help. And the only way we can help you if you're having a challenge or if you've got a question is if you reach out and ask. Now, I'm going to mention one thing here. We are on social media, but one of those in particular, our YouTube channel. I would highly recommend that you go to YouTube, look up the Nadex channel, and subscribe to our channel. We are publishing fresh content every day. And I will point that out to you later as well, but we even do every single morning for 15 minutes. Sometimes it goes to 20. We do some analysis of what's going on in the markets for that day and what the hot spots are. So where might you want to be looking? So I wanted to mention that. Now, the last thing I'm going to say is this is an interactive session. This is an interactive session. Now, we've got a bit of a crowd on, and that's wonderful. You have a questions box. If you want to type in questions as we go, if something isn't clear, please do so. I'm going to be keeping an eye out for that. If I don't get to it right then, I will look back, because sometimes I get into the presentation and I get all excited. I just keep going. I will take a look back and try to answer any questions. So if you've got any questions when we go through this, please type them in. And the truth is, in all likelihood, if you've got a question, somebody else also has the same question, invariably. And so you can all help each other out if you type in some questions. But I will do my best to make sure that I provide clarity to anything that's not necessarily clear as we go through this. Okay, now that we've taken care of that, what are we going to cover today? And I'm going to go through the agenda very quickly. This is the tell people what you're going to tell them. Then I'm going to tell you, and then I'll do a quick little review at the end, tell you what I told you. And it's a great way to reinforce an educational concept. There's actually a method to the madness when doing education, interestingly enough. I am going to start off with a brief who is Nadex. We've got so many new people in our markets. I like to point out who we are and why and why you might want to be here for trading opportunities. Then I'm going to go into today's topic, which is a binary option. The truth of the matter is, you probably already know what a binary option is. We're just using fancy language for something that you already know, but that's the nature of the beast when you take on, you step into the financial markets. Then I'm going to talk about how they work. All right, the risk and reward of a binary option, and understanding how the price of a binary option can change with two factors to consider. Oh, and you know something? Hold on, give me 1 second. I'm getting a technical issue with somebody. Yeah, some people, there's one person who's having sound issues, and often I can't tell her refresh your browser because she can't hear me. Okay, then we're going to talk about understanding binary options, and we're going to talk about price and time. And when I say price, it's price of the underlying and time as time moves forward. And then I'm going to talk about the variety of choices you've got. This is one of the cool things about Nadex is we do offer a variety of choices. And it allows you to customize a trading opportunity that suits your risk reward profile. And then, as I mentioned, I'm going to do a very practical demonstration of the platform, and I'm going to show you. I like to say my mom is from the great state of Missouri, or Missouri, the show me state. Show me. I'm going to show you. I think once we kind of talk through it, the demonstration will resonate pretty well. Okay? So that's what we're going to go through. That's our agenda. Let's get into it. We've got an hour, and I don't want to take up any more time. I really want to start getting into the meat of it. So number one, who is Nadex? Nadex, North American Derivatives Exchange. We throw around Nadex, Nadex, Nadex. That's what it stands for. We are a proper exchange. It's called North American Derivatives Exchange. And we are a regulated exchange in the United States. Now, the reason I highlight regulated and make it sound, and I underline it and I bold it and I even put it in yellow, we report into a US regulatory body called the CFTC, the Commodities Futures Trade Commission. Now, it is the same regulator that very, very large exchanges, for instance, the Chicago Mercantile Exchange, the CME, or even the Intercontinental Exchange, who owns the New York Stock Exchange. They report into the same regulator. And the reason I point that out, and what the designation as a market and a clearing organization is sort of beside the point, is that there are other binary option providers in the world that you might be able to get to over the internet outside of the United States, but they're unregulated. And in that regard, I would say buyer beware. If anything nefarious were to go down, or you were to have some type of challenges and you wanted some type of recourse, well, I don't know how you would go about doing that. We are regulated. We have to adhere to the laws of the United States. And because of that, there are some very strict principles and rules that we have to follow. And quite frankly, you go on the internet, and not everyone has to play by those same rules, but we are properly regulated here in the United States. You can access Nadex from outside the United States. We have a list on our website of all the countries where you can access us. But it's important to know that we are regulated within the United States. So there's an accountability that we have to be held to as such. Okay, now what is it that Nadex does? And specifically, we built and designed contracts for retail traders. Now you go, what's a retail trader? And there are two things there that we really thought about. Is one, a low cost to entry. You do not need thousands of dollars to access price action in the markets at Nadex. You go to some of the more traditional markets and it's going to require a lot more capital. And you simply don't need to have thousands of dollars to trade at Nadex. The second thing is every one of our products has clearly predefined risk parameters baked into it so that there are no surprises. When you trade at Nadex, before you even place a trade, you know exactly what you could potentially make and exactly what you could potentially lose before you even place the trade. And it's very defined risk. Whereas you go someplace else and that's not always necessarily the case. And oops, there's a surprise and you get a margin call, for instance. And if you've ever heard of the word margin call, yeah, margin calls are not part of Nadex. We do not have those. We simply have designed our products and structured our products in a way where that's simply never going to need to be the case. So that is what Nadex does. All right, enough on Nadex. And we do offer, in this specific session, binary options. Now, we also have call spreads and knockouts. If you're interested in those products, I did a session yesterday and the recording is posted to YouTube. You can go back and review it at your leisure, which is why, again, I point you to our YouTube channel. There's plenty of recorded content up there. We also have it on our website. If you go to the learning section on nadex.com, you can see webinars, and we have an archive of recordings where you can go back and if you want to binge watch learning content, feel free to. You know, sometimes you just got to move away from what they're offering on Netflix and you want to binge watch what's going on over at Nadex. Now, let's get into it. What is a binary option? A binary option is a contract. All right, it's a defined risk reward contract and it's a short-term contract. Okay, and we're going to talk about short-term because that can mean different things to people, and we're going to talk about the risk reward. But just know that it's a contract with short-term risk reward, and the product that you're trading, a binary option, it's a statement. It's just a simple prediction, and it's made up of 3 components. Okay, what are those 3 components? The 3 components are an underlying market. Now, we offer binary options, and we'll get into the choices. We offer binary options in equity indices like the Dow Jones Industrial Average, the NASDAQ 100, the S&P 500. We offer them in commodities like gold, silver, oil. We offer them in foreign exchange contracts, all right, Forex pairs. So there's an underlying market. Then there's a condition. All right, and that's the condition, and we're going to talk about that in a second. And then there's, which can also be referred to often, sometimes we'll say the strike price or the level, okay? All terms that can mean the same thing, but there's a condition, and then there's a time for the contract. And that expiration time, we offer a variety of those as well. So we actually offer a variety of each one of these so you can mix and match which market, the condition that you're looking for, and the time, 5 minutes, 20 minutes, 2 hours, today, end of week. All right, so you'll get the idea as we move through, but it's a short-term contract and it's a prediction, and it's got these 3 components. And you know what? I'm going to, and then it doesn't matter whether you buy or sell a binary option, and you can at Nadex buy them or sell them. Right, and that'll come into play in a second. No matter what you do, your risk and reward is capped. It is defined. It is a known quantity. In fact, when we get into the math of it all, each one of our binary contracts, the largest notional value is a maximum of $100. So when we go through it, they're very small, designed for the retail trader contracts, and you can buy them or sell them, and your defined risk reward. And the price that you'll see a binary option trade is going to trade in a range. All right, it trades between 0, which can be considered the floor. It can't go any lower than 0, and 100. It can't go any higher than 100. That's it. It trades in a range, and that's what you got. Now let's get a little bit more descriptive with what these conditions are or what you're actually trading. And essentially, it's a true or false prediction. It's a true or false. It's a yes or no question. And in the end, either the event happens or it doesn't. So I'm going to give you a Nadex example. At the end of today, will the NASDAQ index be higher than 13,500? Yes or no? Will the NASDAQ, will gold be above $1,800 an ounce at the end of the week or at the end of the day or in the next 2 hours? Will gold be higher than $1,800 an ounce at the end of the day? Yes or no? And so it's a true or false. Either at the end of today, gold, let's just stick with gold. Let's just say at the end of the day, gold is either going to be above $1,800 an ounce. If it's not, it's false. And if it is, it's true. And you might be familiar, and I'm leery to use this as an example, and this is why I say you probably know what a binary option is. And I don't want to equate these at all to this concept, but the thought process behind it is the same. Will the Chicago Bears beat the Green Bay Packers this weekend? Yes or no? Sounds familiar, doesn't it? That is a binary option. And in the end, if it's true, it goes to 100. And if it's false, it goes to 0. And that's why it's called a binary option, because there's only 2 potential outcomes. When you trade a binary option, you can trade it, and we'll talk about how that price moves around. But in the end, at expiration, when it actually settles, it'll either go to 100 or it will go to 0. That's it. Binary options. Either it happens, yes, it's true, or it doesn't. No, it didn't happen. It's false. It goes to 0. Now, what are you trading? I mean, what helps you when you're to think about what is the price that you're trading? We told you it trades between 0 and 100. And really what you could think of is that price that you're looking at is the probability at that moment in time that the statement is going to be true as determined by the marketplace. So let's just go through that for a second. Let's just say gold we're trading at $1,800 an ounce. And the question, the binary option, will gold be higher than $1,800 an ounce at the end of the day? Well, it's right now at $1,800 an ounce. And I don't know what's going to happen at the end of the day. At that point, it can either be above 1,800 or it could be below 1,800. I don't know, but it's right at 1,800. So the probability of this statement being true or false is probably 50-50. It would be like flipping a coin. You're right there. I don't know. Is it going to be above? Yes, it's going to go to 100. No, it's going to be below. It's going to go to 0. There's a 50% chance of it being above, 50% chance of it being below. The price of the binary option is going to be right around 50. All right. So when you look at the price of a binary option, if you're trading a binary option for 50, that means there's a 50% chance that it's going to go to 100 and a 50% chance that it's going to go to 0. All right. So that's what you're actually looking at. Now, what's going to happen is if the price goes above $1,800 an ounce, the probability of it being true is going to go higher. So it's probably going to trade above 50. Hey, there's a 60% chance of this being true because we're already above 1,800. If it goes below 1,800, now it's got to go up to 1,800 to get above it. It's the probability at that moment in time is going to be lower than a 50% chance. Now, the cool thing about our contracts is not only is it the probability of the event being true, but it's also the dollar amount. When I mentioned that we have each one of these is worth $100, if I am trading a 50 binary option, not only is there a 50% chance of it going above or 50% chance going below, and if I don't think it's going to be above, I think it's going to go down, remember, I could always sell that binary option. I could sell it at 50 thinking it's going to go to 0, right? I don't have to always just buy it. A lot of binary options exchange you can only buy. At Nadex, you can say, hey, I think gold's going to be above. Yes, I'm going to buy it. Or no, I don't think it's going to be above. I'm going to sell it. And I think gold stinks in the second half of the day. It always does terrible in the second half of the day. It's going to go down. So I can sell it. It's also the dollar amount. You're going to be, it's risking 50 to maybe make 50. And we're going to go through all that as well. All right, so I just wanted to tee up how that binary option works. Now, if you trade other options, like calls and puts, just in case, I like to always throw this out there, the price of that binary option will be impacted by volatility, right? If the market's moving all over the place, and time as it gets closer and closer to expiration. And we are going to look at some very, very, very short-term binary options, and you'll see how quickly the price of these can move when you're very, very close to expiration. In the last few minutes of the game, if it's a close game, yeah, a lot can happen in those last few minutes. So we will look at that. In fact, we're going to do a bit of a deep dive into that. So you can really understand how they work. Now, what is the risk reward? And we've kind of gone through this. One, it trades between 0 and 100. We know that it's $100 is the total notional value of the contract. I mean, that's it, one binary. Now, if you had more and you wanted to invest or trade with more money, you just simply trade more than one. You could trade 5, and now you're talking about $500. Right? So the math is there. I always just start with one contract, but you can always trade more than one contract. Now, the collateral, the amount of money that you have to put up for each trade is whatever your maximum loss is. So whatever you could potentially lose, that is what you have to put up in order to trade a binary option. So to trade one binary option, you're going to have to put up something less than $100. Now, if you buy a contract, all right, the worst case scenario is you buy one, and let's say you buy one for 40. Okay, and I'm just picking a number out of the air. It's a 40% probability at that moment in time of it going to 100, of it being true. So you put up $40. The most you can lose is that $40, because the worst case scenario is it goes to 0. You bought it at 40. You said, I think it's going to go higher, and it didn't, and it went to 0. All right, so that's the most you can lose. Now, if I sold one at 40, I thought it's going lower. I think this thing's going down. I don't think there's any way this is going to go back up. I don't think it's going to get above that price, or at least settle above that price. If I sell one at 40, what's my worst case scenario? My worst case scenario is it goes above the price and it goes to 100, right? It either goes to 100 or 0. So if I sold one at 40, it goes to 100. The most I could lose is 60. I'd have to put up $60 in order to do that one lot. Now, we do all that math for you on the order ticket, so you know exactly what you're getting into before you buy or sell, because you're not always trading on a nice even number. But it's sort of logical. What you could potentially lose is what you have to put up for your trade. Now, on the flip side, the reward. What could I potentially make? Well, if I buy one, all right, and let's go back to my 40 example. I buy one at 40. What am I looking for? The most I can make is it goes above, it goes to 100. So I bought it at 40, it goes to 100. I could potentially make 60. So I would be, when you get into the trade, you know that you're risking 40 and you're hoping to make 60, which would be 150% return on your money. You put up 40 and you got 100, which means you profited 60. You more than doubled your money. Okay, now the seller's maximum reward, if I sell a binary option, the goal there is for it to go to 0. So the most that you can potentially make is the price that you sold it for. All right, so that should be pretty straightforward. And I think I answered the question, so I think we're okay. And again, I want to remind people, because some folks are typing in questions, if anything I say doesn't make sense, just type in your question. Now let's take a look at an order ticket. All right, so this is what you'd actually see on the platform. And when you're trading a binary option, we're always going to give you the contract up the top of the ticket. Here is one on the, now when we say US Tech 100, that is the NASDAQ. All right, I mentioned we have equity indices. We've got the NASDAQ, the Dow Jones, the Russell 2000, and the S&P 500, as well as a bunch of global equity indices. But this one's on the NASDAQ, and the question was, will it be above 94.60 at 4:15 p.m.? Now, if you look in the upper right-hand corner of that ticket, it tells you that there's 18, almost 19 hours left. So there's almost a full day to go on this contract. And you can see the indicative price at the time, it was 94.45. So it was slightly below the condition of 94.60. It was 15 points below the condition. All right. Will the NASDAQ be higher than 94.60 at 4:15 p.m. in a day? And it's currently trading 94.45. Now, you are going to see a bid and an ask. A buy, yes, I think it's going to be higher than that. Or a sell, no, I do not think it's going to be above 94.60 at 4:15 p.m. Now, it could trade above and below there all at once, but in the end, it's where does it settle? Where does it settle in 18 hours and 54 minutes? What is that price? It either goes to 0 or 100. Now, do you have to trade these prices? The answer is no. If you want, you can put an order in between the bid-ask spread. In fact, you can put an order away from the bid-ask spread. I'm going to show you that. In this particular example, and if you use the midpoint, and I think I covered this on the very next slide, but that midpoint is the exact probability for the market. As you can see, 48 is actually, the midpoint for this would be 49. The midpoint would have been 49 because I would have been down 4 to 45 and up 4 to 53. The market was pricing it just below 50% probability. Well, why is it just below 50%? It's currently just below 94.60. All right, so okay, what do the numbers in the corners represent? Okay, the 100. So you see that 100 in the upper right-hand corner and the 100 in the left-hand corner. That is actually how many contracts are there. That's a great question. That is a great question because in this example, it was equally 100. Sometimes you'll see different numbers. There are 100. If I wanted to sell this 100 times at 45.25, I could right now. Now, I'm talking about one lots. And remember, I said we're just doing one lots, 100. But if I wanted to trade 100 of these things, which would be $10,000 worth, I could do that if I wanted. But that's what those numbers are. All right, now, great question, by the way. Thank you very much. That's important. And when we look on the platform, you'll see how those numbers can change. Now, if I wanted to buy one, all right, I think the NASDAQ is going higher. I could put an order in to pay 48. Now, it's right between that bid-ask spread. And will I buy it there? I don't know. I'm allowed to try to. Will someone sell it to me? I don't know. But I can try, and it would save me a few dollars if I did get filled there. If I bought it for $48, that is the most that I could lose. And you can see that at the bottom of the order ticket. The most that I stand to lose is $48. And how much could I potentially make? If this went to 100, I could potentially make $52. There you have it. That's an order ticket. And remember, I could buy or sell. And when you click buy or sell, it'll change the math on your maximum potential loss or maximum potential profit at the bottom. And so you can see what it is very quickly. You don't have to think about it at all, particularly when we're ticking in quarter points. All right, so that's the order ticket. Now I want to talk a bit about price and time. And you know what? I've actually kind of covered that the midpoint of the bid-ask spread is the probability. Now this is, but the reason I wanted to get to here is this is what's important, is the price of the binary option does not have to move exactly with the price of the underlying. Just because the underlying goes higher doesn't necessarily mean the price of the binary option is going to go higher. And what would impact whether the price of the binary option itself changes, whether the probability of the event being true changes, it's going to be two things. It's how much volatility is there and how much time is there until expiration. Right, those two components, and I told you I would mention this. We're going to quickly go through some examples. I don't want to spend a ton of time with this, but I want you to see and understand, because if you don't get it and then you start trading these and they don't behave the way you expected them to, I don't want you to get frustrated. I want you to go into it with your eyes wide open on how quickly these prices could potentially move or how stagnant they can be depending upon the market conditions. So I'm going to go through an example. I'm going to go through this example in 3 different ways, but this is the euro US dollar example. If you're trading a Forex, if you happen to like trading foreign exchange. And the question was, and the statement is, will the euro US dollar be greater than 1.14 at 3 p.m.? And here we go. We have a chart of what happened all day long with the euro US dollar. It was moving all over the place. It went up, it went down, it went sideways, it went up, it went down, it went back up. All right. And you can see right where 114 is, right where the condition is. And in the end, remember, it's going to be either 0 or 100. It can only be 0 or 100 in the end. But let's take a look at it throughout the day. Now, this is a highly volatile market. Early in the day, and remember how I mentioned, and we just looked at the previous slide, which was why I had it, what is the midpoint between 54 and 58? And it's 56. Right then, at that moment in time, the market was predicting a 56% chance that at the end of the day, it would go to 100. All right. Now, why was it 56%? Well, it's already above 1.14. All right. At that point in time, you can see it's clearly above the line. And so it's already got a head start. It's got a head start. And at this moment in time, statistically speaking, and what the market was pricing in is that it's probably going to finish above. Now let's skip ahead. It immediately sells off. All right. Early in the day, there is a sell-off. It drops below 1.14, and there is a move. Now it did move. The price of the underlying did move down, and the price of the binary option also went down. It dropped down to a 44%. Now that's a pretty steep decline in the price of the euro US dollar. That's a okay move in the price of the binary option. It's below 50%. All right, now they're giving it a 44% chance because now it's behind. It's already below 1.14. But what's going to happen at the end of the day? There's still a lot of time. This whole day, I mean, there's a lot of time in the day, and we still don't know what's going to happen. And what we've seen already too is there's volatility, which means it's going to increase the chances that it might go back up above. All right, now we're going to skip ahead, and half of the day goes by, and what happened? The price of the underlying, even though it went up and down and up and down, right at this moment, it's about the same price as it was before, but instead of being a 44% chance, it dropped to a 36% chance. Why did it drop? Well, now there's only half a day to go. There's a lot less time for it to potentially get above 1.14 and stay there. Right? It's got to settle there at the end of the day. So it decayed some. All right. It went from a 44 and it just kind of rotted down to about a 36. But then late in the day, it spikes up. All right. Now we're getting towards the end of the day. But look where that look how much more dramatic the move of the binary option was. Early in the day, when it made roughly the same move, it dropped from 56 down to 44. Now it's made the reverse move. It's gone back up, and it went from 36 all the way up to 74. All right, it's a pretty quick. I mean, that's a 40-point move. That's because it's back above 1.14 and there's only a third of the day left. There's a lot less time. Now, this is where you see big price swings, and we are going to look at that as you get closer to expiration. And with volatility, these binary options can move pretty quickly in price. And here we see it make that same move back down, and here it dropped all the way down to 24%. Now there's only a 1 in 4 chance. The market thinks there's only a 24% chance that it will settle above 114. Not trade above it, but actually finish there. Now, 1 in 4 chance means there's a 75% chance this is not going to happen, but there's still a 25% chance that it will. So, I mean, remember, it's just probabilities, and that's really what you're thinking about is what's the probability? And in the end, there's a chance, right? And indeed, this thing traded back up above one spot 14 and stayed there, and it eventually settled at 100. But I wanted you to see how volatile and how quickly and how much the price of the binary option can change throughout the day, but particularly toward the end of the day. All right, now I want to walk through. Now it's moving back up and down and all over the place. I want to quickly go through what happens when it's not so volatile. What happens if it just kind of stays flat all day long? And there's opportunities for that as well. You can trade binary options in those scenarios. Here's one, same example. Is the euro US dollar going to be above 1 spot 14? And early in the day, it's a 44% chance. All right, it's below. We still don't know what's going to happen. There's a lot of time left in the day. But as the day goes on, and this is actually, I want to point to, it starts rotting away. This is important. All right. In the middle of the day, it was about a 34% chance. And you can see that there was not very much volatility. This is not moving along. It was just simply going sideways. If you look here, going toward the end of the day, the price of the euro US dollar actually went higher. It went up. You can see how there's an uptrend there. But while the euro US dollar actually went higher, the price of the binary option went down. All right, if you can see that as time went on, because there's no volatility. And with no volatility, even though the price has ticked up, the binary option that people were comfortable saying this is not going to get above 1 spot 14 and stay there. We think it's going to stay below. And at this point, they were only giving it a 20% chance because there's very little time left in the day and there is no volatility. What you have at this point in time is no volatility and little time. It's heading quickly toward its zero. And in fact, it ultimately went to zero. All right, this is where it stays below. All right, the probability of the event being true, of the euro US dollar settling above 1 spot 14, stayed below, low volatility, it rotted away. Even when the price went higher of the underlying, the price, the binary option actually continued to go lower until it went to zero. Let's take a look at the same thing, but we're going to look at it above. All right, just so you can see the opposite side of it. Early in the day, it's above 50. It's above 1 spot 14, so it's above a 50% probability. We get to midday. I mean, you actually look at the price of the euro US dollar has actually declined some, but interestingly, the probability of it staying above here as priced by the market is higher. It's up at 66%, right between that bid-ask spread. We go sideways for some time. It's up at 80%, and it ultimately, in fact, at the end of the day, it's kind of interesting. It went from an 80% probability, even though the price of the euro US dollar went down and it got lower and lower and lower. It doesn't matter. As long as it stays above 1 spot 14, it's going to go to 100. It'll be worth $100. Okay, so there was the examples. I wanted to walk through those. Now, at Nadex, we give you a lot of variety and a lot of choices. Some people think it's, well, you're giving me too much, but I think it's nice. And when you see it, I'm going to jump over to the platform shortly. When you see it, it makes sense because you can very clearly see what your opportunities are. But while we offer a variety of underlying markets for binary options, foreign exchange, equity indices, commodities, all right, in each one of those markets, we give you time frames. 5 minutes, 20 minutes, 2 hours, today, the end of the week. And then even inside those time frames, we give you a bunch of different conditions. Is it going to be above? So for gold, we might get, I'll show you. There's a place where we show the range, but we're going to give you a bunch of different choices. Is it going to be above 1800, 1820, 1840, 1860, 1780, 17. So you've got plenty of choices, and the probabilities on each one of those is going to be different, so that you can choose the risk reward profile that suits your trade. So just so you can visually see it, and I stuck with the euro US dollar, you can see how we've got 2-hour contracts. We've got every 6 hours contracts. We've got all these different 12-hour contracts. We got daily contracts. We got weekly contracts. So you can choose, and you can see how everything settles out, how much time is left. And if you remember, time is a very big component. Do you want to trade something that's got a lot of time, or do you want to get where the action's crazy, or not crazy, moving around a lot, something with less time? So you've got a variety of times, and you're going to have a variety of strikes. Here is an example with the euro US dollar. One spot 625, one spot 0725, one spot 0825. There's going to be different levels, and at each one of those, the probabilities will be different, and you can choose the time frame and the condition that suits your trade. Now, I'm almost done with the slide deck. Alert, alert, alert. If I don't have your attention, or if you were drifting, if you take nothing else away from this presentation, I want you to take this away. This is a very important rule when trading binary options. All right. Even though there is an expiration associated with the contract, it does not mean you have to wait until expiration to see what happens. I'm going to say that again. This is more important than anything else I've covered today. Just because there's an expiration associated with the contract, it's going to expire in 5 minutes, 20 minutes, 2 hours at the end of the day, does not mean I have to wait and see what happens. You can choose to exit your position early. You can trade out of a position. Now, why would you want to get out of a position? Well, you would do it for 2 reasons. One would be to lock in profits. All right, and let's just think about that. I bought a binary option at 20. It had a 20% chance at that moment in time that it would be above the condition and would settle at 100. So I'm risking 20 to potentially make 80. I want a 400% return on my money. I'm risking 20 and I'm looking for 80. Now, you buy that one at 20 and it goes right at the money. All right, it went right to the condition, and from earlier that is probably going to price the binary option around 50, because at that moment in time, there's a 50% chance it's going to go up and a 50% chance it's going to go down, but you bought it at 20, it's now trading 50. Do I have to wait and see if it goes to 100 and I make my 80, or if it stays below and I lose my 20? No, you can sell it at 50 and get out. And you risked 20, you made a profit, it went to 50, so you made a $30 profit on a $20 investment. Again, 150% return on your money. You risked 20, you sold it at 50, you collected 30, and you're out. You've taken your risk off the table. Now, in the end, do you know if you did the right thing or not? I don't know, because it could have gone to 100 and you left $50 on the table, or it could have gone to 0 and hey, thank you, you made $30, you were going to lose 20. You've got to make that determination. But you can liquidate a position early, and you would do it, one, to lock in profits. The other reason you would do it would be to limit losses. Let's say you bought one at 60. All right. You thought this is going to stay higher than this condition. I think this is going up. I'm going to risk 60 to only make 40. I'm comfortable with that because it's a high probability trade. I'm buying it at 60. I think I'm going to make my 40, but then it goes down and it goes down, and now it's trading at 30. And you're like, oops, maybe I misinterpreted the chart. My opinion was wrong. Do I have to lose all 60? Do I have to watch this go to zero? The answer is no. You could simply sell it back out at 30 and take your lumps. And you risk 60, you were trying to make 40, but you were wrong and you just cut your losses. You sold it out at 30 and you walk away and you say, all right, I lost $30. It wasn't a good trade, but you didn't have to lose all 60. You're able to cut bait. You're able to get out. So you can exit a position early, and you would do that either to lock in profits or to limit losses based upon the market conditions. So I can't emphasize that enough. It's one of the most important things about trading anything. But binary options, you have to you can reassess. You can always reassess what your opinion is and make a decision from there. You don't have to wait. Again, email us, customerservice@nadex.com. We want to help you. Any questions? Again, on YouTube. I'm going to show that to you in a second. And let's do this now. I want to go and let's do that off-roading session. And I'm going to change what I'm sharing. So give me 1 second here. And it looks like I've answered all the questions. And if anyone else wants to type in questions, by all means do. If there's a particular market that you would like me to look at as an example, please type that into the question. I'll try to customize things so that, for the folks that are on here, I can show what you want to see. And let's see, I want to go here. Okay, perfect. All right, I wanted to show this quickly. And this is the Nadex YouTube page. All right. So if you go to YouTube, you can find Nadex. You can subscribe to it. I would recommend that you subscribe to it. So you just simply go to YouTube, you type in Nadex, you can find it, and you subscribe to the channel. Now, we've got a lot of different videos up here for you to review. Again, I mentioned you could binge watch. A lot of it is also on our website. If you go to the videos button, though, this is also another way to sort through. You'll see our most recent content. And I mentioned every morning we do a morning analysis. 9 a.m. Eastern, 8 a.m. Central, we live stream it. In fact, if you go here and you see upcoming live streams, you can even set a reminder. Oh, remind me. And if you miss it, know that the recording is right there. If you want to go back and look at the recordings from this week, go back and take a look at them. They're only 15 minutes, maybe 20 minutes in some cases. But every morning we review what happened overnight, what are the potential hot spots for the day, and are there economic reports or news releases that are coming out, and where might you want to look for opportunities for the day. We do that every morning. We'll always have a week of these roughly out here, but know that we do it every morning, and you can come and you can catch these live streamed every morning. All right, enough about that. I want to get over to the platform, and let's do this. Now, I am logging into a demo account. If you do not have a demo account, I would highly encourage you to get one. It's where you can practice. You can practice trading. You can get comfortable with the platform. You can get comfortable with the products. It's got paper money. It'll start off and you have $10,000 of paper money, fake money, where you can practice trading and see how. Now, it's not going to be perfect. A demo environment and a live environment are different. The prices and the markets are going to be very, very similar, but your experience in the demo market is going to be different. And that is because you're only interacting with people who are currently in the demo environment. Whereas if you're in a live environment, all right, you're going to have a whole lot more participants that are interacting with you. So notice I am in a demo, and I would recommend if you don't have one, get one, and you can practice. Now, for binary options, as I mentioned, we've got them in equity indices. And I mentioned the US equity indices, but we've got global indices, the FTSE 100 over in the UK, the DAX, the DAX 30 in Germany out of Frankfurt. And then we've got our US indices. If you're not familiar with the Russell 2000, that's the small cap stocks. So you can pick which one you like the best or which one's moving. We've also got foreign exchange pairs. We've got commodities. Someone was asking, and I saw this. I'm going to go ahead and click on commodities for a moment. Actually, I want to do one thing quickly. Let me just see. Okay, we're going to do this. All right, I'm going to click on commodities, and you can trade. What's the price? What's gold going to be? What's crude oil? Crude oil has been very volatile lately, particularly with the weather in Texas and the U.S. supply chain getting disrupted. But you'll notice that we've got a bunch of different expirations for the binary options. Let's just pick daily in gold, and I'm going to just click on one of them. I'm going to get rid of the chart. I'm going to click down here, and you can customize your chart. Let's make this a 30-minute chart. Okay, there we go. All right, you can see gold's been moving around a bit. All right, this is the price of gold right here around $17.80 an ounce. Now, we got an order ticket over here, and when I click buy, notice how it shades the chart, the color, where I would need gold to go for it to settle at 100. And for this to be a profitable trade. If I thought gold were not going to get above this 1781 level, and I thought it were going to stay lower, I could sell one. Notice that the chart turns red. Hey, you would need it to settle down here and for it to go to 0. Now, does my math for me on where I'm buying or selling. So let's actually go. Let's put one between. Let's say I think gold is not going to go above. I think I think there's it's gold's actually ticking higher right now as we do this. Isn't that funny? So let's put in 37. 37. If I sold one at 37, all right, the most I can make is $37. That'd be the most because it goes to 0. What could I lose? I could lose 63 because if I sold it at 37 and it settles up above, it would go to 100 and I would lose $63. So we always give you the maximum profit, maximum loss on the order ticket. And you can see how the price and the probability is changing. How much time is left? Well, that's because there's only 36 minutes. This is in a half hour. You'll see these probabilities move a little bit more dramatically as you get closer and closer to expiration. And remember, I could put bids and offers in between. If I think it's definitely going to stay above 1775, the market's already giving it a pretty high probability. Could I say I want to buy one at 92? All right. Well, why would I want to do that? I mean, I could lose $92 if it were to settle below 1775. And could gold drop down here? Yeah, there's an 8% chance that it does, but I could risk 92 just to make $8 in the next 35 minutes if gold stays above 1775 and settles above 1775. If it settles exactly at 1775, just so you're aware, that's considered false. It would go to 0. If it settles exactly at 1775, this contract would settle at 0 because the question is, will it finish higher than 1775? So it has to finish higher in order for it. So it'd have to finish at 1775.001, and it would be higher. Now, as gold ticks down, notice how the probability of this is starting to drop some, because now there's a chance maybe it will actually close down. If it came right down to this price, all right, if it came right down to 1775, guess what price the binary option would be trading at? It'd be trading right around 50. It would trade right around 50 because it'd be a 50% chance. And remember, I can buy or sell. If I think this is going to drop, all right, I think gold is actually going to drop. Even though the market is giving this a 90% chance of being above here in the next 35 minutes, I think it's going to drop, and I'm going to sell one at 90. All right, what would happen if I sold one at 90? Well, I'm hoping it goes to zero, so I could potentially make $90. If I sold one at 90, I could potentially make 90. What could I lose? It stays above here, it goes to 100, and I'd lose $10. So it would all depend on what you think is going to happen and how much you're willing to risk, and what's the probability of the outcome actually working your way in the next 34 minutes. All right, now what I'd like to do is I really want to, I think we're okay. All right, here's a 5-minute binary option. I'm going to pick the Euro US dollar. Notice how there's 4 minutes left to go. Okay, I'm going to get this out of the way. I want to make this a 1-minute chart. I'm going to zoom this in. I'm going to move this. Let's watch what happens we've got 3.5 minutes to go, and it is currently below 121.23. So this contract is currently trading around a 35% probability. Notice how this 121.21 is around an 80%. And we are watching what's going to happen in the next 3 minutes. Okay, this is where there's price action. As this ticks higher, did you see this one that was around 35% is now at 75%. This one up here, which was low, which was almost zero, is now going closer to 50. In fact, I mean, look at it go. Now it's because we're looking at. Now, if I think this is going to keep going higher, all right, maybe I think it's going to keep going higher. Let's go ahead and buy one. All right, I bought one, and notice I've got a position, and I bought one, and I bought it at 33.75. Okay, I bought it at 33.75, which means I could only lose 33.75. All right, now I could potentially make 66.25. What's going to happen in the next 2.5 minutes? I don't. Right now, it's ticking lower. It's going against me. All right, it's looking now like I made a mistake as this starts going lower. And look at this one here. It's as it ticks down. I don't know what's going to happen, right? You can see how these probabilities will move dramatically. Now it's ticking back up a little bit. There's still a chance. I don't know what's going to happen. Do I have to wait and see what's going to happen? No. I paid $33.75. Maybe I would be happy selling it at 66. So if I wanted to put an offer in and I wanted to double my money and I wanted to put one at 66, I can place oh, look at that. I did it too fast. It moved so quickly. It moved so quickly. In fact, go to my order history. I sold it at 70.75. All right, so it went from being I was going to lose money. Now, should I have sold it? Apparently, no. I sold it at 70. I looks like I left $30 on the table. But in just a few seconds, in less than a minute and a half, I bought one at 30, call it 37, and I sold it at 70. So what is that? That's $43. I made $43 on that trade. I could have made more. Let's watch and see what happens. There's a minute to still go here. Now, it could absolutely still come back down below here. And look at this one up here, this 121.27, which was at zero when we started. Well, now it's going to go right back to zero. It was just up at 50 because it was right here. I mean, look how quickly these change. Now, I sold mine out at 70. We still have 37 seconds. Now, at 25 seconds, you will see these prices disappear. Wow, and now it's coming back. The reason that you see prices disappear is because no one wants to take the risk. These, in the next 20 seconds, every one of these is going to be 0 or 100. That's it. So let's actually see what happens in 13 seconds where this settles. It looks like at this moment, there's 8 seconds. Oh my goodness. 4, 3, oh, wow. 2, 1, it just settled. Guess what? This 121.27 actually went to 100. This one settled at 100. Look at it right there. It actually was above when it settled. And mine went to 100 too. And now the next 5 minutes clipped. All right, this contract, let's go back to my markets. I'm going to hit refresh down here because we got to refresh it. All right, and we got a whole new set of 5-minute binary options where this 127.27 is the 50% one. Actually, it's a little less than 50, and it's a whole new opportunity. Every 5 minutes, these prices jump around, but I wanted you to see in the last few minutes how the probabilities of a binary option can change so dramatically. And do I have to wait to see what happens? No, I can lock in profits. Sometimes I might leave money on the table, or I can limit my losses. Get out. I don't have to lose everything. I could simply liquidate. I could take a contra position. If I think this was going to go lower and I'm going to sell one, let's just sell one. And I'm just having some fun here. All right, I did sell one here at 32.75. Oh, I'm trying to get one that I lose on, just because I wanted to show you. Now, I sold one at 32. Could I buy it back right now and make a little profit? Sure. Oh, look, it's ticking higher. But even as it ticks higher, I don't know what's going to happen here. Could I wait and see what happens? Now it's ticking up. I want to see. I want it to go higher, actually. I'm kind of hoping. All right, so I sold one of these at 32. All right, I sold one at 32 and it's going against me and it's ticking higher and I'm getting uncomfortable. Do I have to lose my money? No, you know what? Or I could change my opinion. No, I could just, well, now it's going right back down again. I could just buy it back. I just bought it back. I took my position off. What did I actually do? Oh, I think I actually might have. Looks like I scratched it. I traded it at the exact same price. Look at that. How odd is that? I bought and sold it. Oh, let's get rid of that. So the point being, if you make a mistake, you can always get out, or you could change your mind. And again, these are the probabilities that the statement is going to be true, and that is what you're trading when you trade binary options. I went slightly longer than I wanted to. This session was recorded. It will be up on our website in the archive section. It will be up on YouTube. Again, I want to thank everyone for joining us. And hopefully you got a lot out of this and helped you understand binary options. I also want to mention that if you've got friends, we do have a refer a friend program. Email customerservice@nadex.com. If you refer a friend, you can both end up getting money from Nadex into your account. So check it out. Email customerservice@nadex.com. Check out our refer a friend program. With that, again, I want to thank you for joining me on this Friday, and hopefully you'll be able to join me every morning, 9 a.m. Eastern, 8 a.m. Central, to talk about hot spots in the markets. I hope you all stay safe, warm, and that you all enjoy your weekend, and good luck in the markets. Thanks, everyone.